one view the equities market over in Nigeria? It's been, I think, on an uptrend so far this week, but it's like there's some headwinds. Give us your take.
Okay, it's been positive for a while. It's been positive since the lockdown, since April. Um, for the past 6 weeks, it's also been trending upward trend, predominantly driven by some certain factors that we currently experience in Nigeria. Most definitely, the FX liquidity has been some sort of a benefit to us, to be honest, because I'm very sure if there was FX liquidity, majority of these foreign investors that control our market would have left. But what we're seeing now is most likely the local investors taking advantage of low prices to accumulate, and also considering we had some sort of positive results for Q2 for majority for some few companies. We believe that sentiment is what we're witnessing in the market now, where local investors are just picking up these stocks, and also considering the fact that the fixed income market is predominantly having very low yields, and if we position ourselves quite well, we could benefit from dividends that probably would pay interim by most of these interim banks. So I believe that's what the strength is coming from. But predominantly, I believe it's the FX illiquidity that is driving the market.
Thank you for that, Ahmed. In fact, you mentioned fixed income. Let me just touch on the money markets. I'm not asking for an analysis here. I'm just touching on the the auction that happened. Look, the auction, yesterday's auction, T-bills, 91-day 1.14, the 182 1. Okay, that one actually went up. 182 day, the prior stop rate was at 1.3. This is at 1.8, and then the 364, that's at 3.3. I mean, the subscriptions though, I'm sure that the subscriptions are still, they're still being oversubscribed. So is there still an appetite for the equities market if you still see oversubscriptions for T-bills here and there, and then maybe even bonds as well?
Like you said, you don't want an analysis from me, but my take is you will still see a lot of investors going to that market, into the fixed income market. Why? Because our risk appetite is predominantly low. We prefer, and a lot of investors just believe, okay, at this current situation, COVID-19, we don't know when it's going to go. It's going to go. We don't know what further impact the businesses might have in Q3. So some investors just believe, let's just play the good card and stay in the fixed income market, given that the yields are low. And it's the excess liquidity that you see that is driving, that's still driving those yields for that lower. For me, I'm a very big supporter of the equity market. So I believe if these funds are moved to the equity market, which I believe some investors are still doing, just taking it in bits. That's why you're still seeing the option in the equity market. But I believe if they channel these funds to the equity market, we should see less impact on the fixed income market in terms of yield.
Okay. Okay, cool. Now, KB, there's a question on WhatsApp here. KB is asking how inflation affects investment in the stock market. I want to get your take on that. I would think that if inflation is eating your money, and things are getting more expensive, it probably reduces your incentive to want to invest in the market. But what's your own take? What do you think?
I'll go a bit academic. And the fact is, the inflation affects fixed income instruments more than equity instruments. And based on what we know, the equity market over the years has, not necessarily in Nigeria though, but on the global scale, the equity market has been a good edge for inflation. So over the long term, if you look at it as far back as the 90s and the 80s and 60s, if you had been an equity investor, you would most likely be smiling to the bank now. And if you look at your performance or your returns that you have earned over the years, vis-a-vis the inflation, you would not even be speaking about inflation, to be honest. So that's why a lot of people, academically and based on empirical study, have concluded that equity investment is a good hedge for inflation compared to fixed income instruments.
All right. Okay. Thank you for that. Thank you for that. You guys send in your questions. Ahmed, what about I guess sectors? If I can ask you about sectors, I know you're going to say financials off the top before going anywhere else, but please tell us your sectors.
Yeah, to be honest, I would say financials. For us, we've seen resilience in the cement industry. So if you look at the Q2 results of this cement stocks, you see that the cement companies, you see that the results were good compared to our expectation of the impact of COVID-19. If you also look at the agricultural sector, you see that same business resilience, and we can understand why the agricultural sector is that way, because there's been a lot of support from the government to build that to grow that sector, and honestly, lastly, rather, the telecom sector has also been resilient, which we expect, because now we're using a lot of data, we're using a lot of based on the lockdowns, a lot of data usage, call usage, and I'm even on speaking to you right now, I'm also using data. So we should so those three sectors are, they should definitely do well, business resilience. For the financial sector, for me, because we haven't seen the Q2 results of the key banks in Nigeria, because of their auditing their financials, we should see those results come out pretty much very soon. We can't really state how that sector is going to play out, but based on the little understanding that we have, and the fact that a lot of these banks make a lot of generate revenue from e-businesses and e-transactions. So the use of data, and the use of data, the use of ATM, online transactions, and all that, and all those charges that they get that are non-interest based. We expect that we should see some sort of good performances from these businesses from these banks when they release their results pretty soon. So that's pretty much it. But for us, our key sectors that we're focusing on is still the telecoms, agriculture, and the cement industry.
Thank you for that. Messages, yeah?
Yes, we do have messages. MI from Akoka says, this is more than headwinds. This is now turbulence. I can't believe that a day will come in Nigeria when the inability of investors to repatriate their profits will drive upward trends in the equity markets. Oversubscription at what rates? I think bearish sentiments will increase going forward. He also adds, you forgot to add politics as a sector that is doing well in Nigeria. I mean, you want me to off your mic? We have this other one from VOK. He says, Ahmed said that equities are a good hedge against inflation, but not in Nigeria. What does that mean exactly?
Okay, Ahmed, you want to take that again?
Okay, so we know that over the last 10 years, to be honest, there's been only three. We've only had 3 positive years out of 10. So yes, we don't see that academic theory played out in the Nigerian market. And there's this saying that goes that things are really different in Nigeria. So if you start to look at things deeply, you realize that majority of these theories that we know don't really play out in Nigeria. So maybe that's why I said excluding Nigeria. But if you look at it across the globe and looking at the key developed markets, you see that inflation edge play out.
All right. Excellent. Thank you for that. More messages, yeah?
Yes. This one is from, what's your name? Please,
Okoro.
Okoro says, good morning. Apart from fixed income, equities and mutual funds, how is the REITs markets in Nigeria and the ETF? Can we go into it?
Well, okay, that's real estate investment. That's real estate investment trust. Ahmed took us on through ETFs a couple weeks ago. So, Ahmed, you not real estate investment trust. That's not, you don't cover that, do you?
I don't, but the thing is, we don't have a lot of real estate investment trusts. We don't have a lot of REITs in Nigeria. So from top of my head, I think we have only 2 or 3. There's one actually coming up now, but the major issue with that instrument is because it's traded like a stock, just like the way ETFs are traded like stocks. You don't see a lot of liquidity in that, on that instrument on the exchange. So that's why a lot of investors don't really go there, because you don't want to see where you buy into the REIT, and when you want to exit, or when you want to exit, you are not able to do that. But yes, predominantly they have few REITs on the exchange, but those are the conditions you need to take note of when investing in them.
All right, so we have this message from MI from Akoka. It says Nigeria does not have a functional economic model or equation. The anyhowness is mad. One policy from government, and your Gungu will find himself on the expressway.
All right, we only got a minute left. Ahmed, go ahead.
Yeah. So I totally agree, with the comments. That's why I said we don't see a lot of these theories come out, because some certain policies will just be enacted by the government, and you see a lot of things just changing out of the normal. So I totally agree with that comment.
Thank you for that. I mean, still more questions from Okoro. No, that's actually Okoro. This is from KB. But we've run out of time.
Yes,
we're
out of time.
Okay, so KB, what we'll do is we'll try and get Ahmed back, because he's asking now for I guess investment opportunities. But we'll have Ahmed from Stanbic IBTC back again. Head of investment or the equities research over at Stanbic IBTC, Ahmed Banu. Thank you so much for your time. We appreciate your insights on the markets.
Yeah, no problem. Have a nice day.
You too. 6:45. Stay with us here on Smooth 98.1. We wish you could get to 7. No. At 7:30, we'll be back for Freshly Pressed 91. If you missed any part of the show, please join us on YouTube. Just type Smooth 91 FM Lagos and subscribe.
Beyond the headlines. Business Express on Smooth 98.1. In association with Stanbic IBTC. Stanbic IBTC. It can be.